Hello everyone, welcome to a new video. Today I will be going through the earnings of FTCI Solar, which just reported them this past Monday, August 9th, and which were not good at all. I mean, we already knew that the numbers that they would report were not going to be good, but they even missed the estimates from the analysts. The revenue estimate, they missed it by 7.68%, and the EPS were negative 18 cents per share, while the analysts had forecasted negative 16 cents per share. For me and any investor, earnings releases are a great moment to see the progress of a company, or in this case, not so good progress of it. And I always read all the earnings or the quarterly filings, as well as listen to all the earnings calls of all the different companies that I have in my portfolio. One of these companies is FTCI Solar. And today I would like to discuss not just the earnings, but also I would like to talk about the company, the stock, and I will go through the main points that I look at when checking these earnings releases and the different red flags that I have spotted, not just in this quarter, but over the past few quarters. And additionally, we will also be looking back at the video that I made more than a year ago when the company initially went public, because it just went public about 1 year and 4 months ago. And that's actually when I initially discovered FTCI Solar and how things have changed since then. First point to discuss are revenues. This came in last quarter at $30 million, which was a decrease of 38% compared to the first quarter and 39% comparing year over year. More than just the decrease of revenues, which is obviously not good, the problem again was in the bottom line, as the net loss was of $25 million or 26 cents per share, which is lower than last year, in which they reported a loss of 61 cents per share. It was crazy, but it's still not good. In fact, back in April 2021, when they did the IPO, and even September, October of last year, most analysts were expecting the company to turn profitable during this year, so 2022, but this doesn't seem the case so far. In fact, during the first 6 months of the year, they have already accumulated a net loss of $53 million. What has happened though? Well, there has been a mix between regulatory issues with new laws surrounding solar modules and the imports of those, which now seem to almost be resolved, but of course it stopped many developers from continuing with new projects, as well as the increase in prices of the raw materials used for the trackers that FTCI Solar sells. By the way, if you are getting lost, if you don't know what FTCI Solar does, I suggest that you go and watch the initial video I made more than a year ago when the company went public, in which I would go a bit more on a more basic level on what the company does, and then you can follow along much better this video. I will leave it here above and also down below in the description if you are interested. Solar trackers, besides the solar panels themselves, they also need a structure mostly made out of steel, which is the one then just sustaining the solar panels and also regulating the position to optimize their performance. The price of steel since the beginning of the pandemic had almost doubled, and this compressed drastically the margins of the contracts that they had already been awarded and had at fixed prices, but they of course had not accounted for all the sudden increase in all the prices of all the materials, aka inflation. Here I placed the example of steel, but there are many other components of solar trackers which also increase substantially in price, like for instance copper, not to mention the increase in the transportation cost, because although the company is a US company and most of their business they do it within the US, all the different components of all the solar trackers that they install are just made abroad, which means that they need to transport them. Yes, it's true, now they are also having some projects internationally, and hopefully this gains a bit more of scale moving forward, but up until now it has been like this. Since that happened, the company redid the contracts to make them account for inflation, basically make sure that they have sufficient margin and so on. And from the fourth quarter of this year onwards, there should already be the new contracts in place from the projects that they will build, which should also be with higher margins. So hopefully within 2023, they are able to reach that profitability, which was supposed to arrive already this year. And additionally, in the graph I showed earlier, it seems like the prices for most raw materials are dropping substantially, which should also play in favor of FTCI Solar. Also, just for some more background, its main competitor, which is Array Technologies, went and is also going through the exact same situation, although they seem to have managed it a bit better, as we will see later on when we compare both companies. What I have shared until now is their plan and what they have communicated, but let's look now into the financials. We have already seen that revenues have decreased while losses are still remaining. Another red flag is that the company has issued more shares to raise capital, and they haven't done precisely that at the best share prices, or at least in my opinion. In the last year, the amount of shares outstanding has increased in about 14 million, which has represented an increase of 16.27% in the amount of shares outstanding they had. and at the same time the shares of the company are down 51% since last year. For me, this dilution is something that I don't like to see, because besides the fact that I wasn't expecting this when I initially invested in the company, of course I could expect a bit of dilution, but not at such levels. I do understand that the situation has changed a lot, but it is not something that I like to see as an investor. Leaving the dilution, let's see how the balance sheet is looking like, because burning so much cash quarter after quarter in the end ends up having an impact in the balance sheet. And looking at that, we see that as of June 30th, so from the latest release that they have, they still had $66 million in cash, which is down from the $102 million that they had as of December last year, and down from the $142 million they had in June 2021, so 1 year ago. So we see that the cash is decreasing, even though they have been issuing more stock to raise capital and not run out of cash. Basically, unless things change in the next quarters, this dynamic in my eyes is likely to continue. The company basically issued more shares to not run out of cash, and of course the cash balance in the balance sheet slowly decreasing even when they are doing dilution. And moving away from the cash position, the good part is that they have no debt on the balance sheet almost, which is also positive to see, because they can still get debt to sustain operations if they choose not to continue issuing more shares like they have been doing over the past quarters. Overall, and despite everything that I have mentioned, the balance sheet looks pretty healthy with a debt ratio of 46%, which is very conservative. This is basically because the company has gone the route of issuing more shares, so diluting shareholders to raise capital, rather than taking on more debt to, of course, also raise capital. Those are the main two options that companies have when they need more cash to sustain operations, and the one that FTC Solar chose was to dilute shareholders. With this very solid balance sheet, at least me as an investor, I'm a bit more calm, because just with the cash that they have currently on the balance sheet, they should still be able to sustain operations unless something crazy happens for the next year. And I say this of the next year, but actually to be able to say this, we need to look at the cash flow statement. So let's look at that. In the past 6 months, the cash used in operations has been of negative $36 million, and the free cash flows have been of negative $37 million, which means that if they continue burning cash at the same rate they have done over the past 6 months, they should still have enough for the next year, because we said that they had $60-something million in the balance sheet. However, as we said, hopefully things improve over the coming quarters and the coming year, and they are able to turn into positive cash flows, which is actually something that they already achieved before they went and they IPO'd back in 2020. Talking about future performance, let's look at the guidance that the company gave for the next 2 quarters. For revenues, they are expecting next quarter to also be very bad, with between $16.5 to $19 million, an implied decrease of 65% in revenues versus the same quarter of the previous year, and the adjusted EBITDA, so not even talking about the net losses, to be between negative $14 to negative $19 million, which is going to be another awful quarter like this one. However, for Q2 this year, things seem to be looking better, with revenues expected to be between $75 to $90 million, which would only be down 18% year over year, and reaching break-even adjusted EBITDA. For 2023, there is no guidance yet, which is pretty common. I mean, companies usually don't guide for guidance of the following year at the middle of the current one. Usually they wait until they report the earnings for the fourth quarter, and then they guide for the full following year. So hopefully in January next year, February, when they report the full year 2022 results, then they will guide for 2023. However, the company said that it has contracted and awarded orders valued at $774 million in the pipeline. So it seems like if there are not many more unexpected news, revenue should go back to growing in 2023, and hopefully not just revenues growing, but also reaching profitability and positive cash flows, which is one of the most important things I focus on. Even though now I have cited the guidance that the company has given, this is just what they are saying, but are they actually going to meet it? For me, to analyze this or to decide whether to believe or not management, the best way is to look at the past performance or the past things that management has said, and whether these have turned out to be true or not. For instance, we can go back to when they reported just 6 months ago the results for 2021. Back then, they said that the revenue expectations for 2022, so this year, were of between $415 to $460 million, and so far, based on the first 6 months and the updated guidance that we have just looked at, it looks like they will end up reporting just around $180.2 million. This is about half of what they initially gave as guidance just 6 months ago. I will leave it up to you, but I just think that management is not really able to forecast the business at the moment, so I'm not sure whether to believe them or not. I am more leaning towards not believing what they are saying. And linked to this, there is also an important thing to mention, which is that last September 2021, the previous CEO resigned from the position. I think that probably it was getting a lot of pressure because they reported massive losses just before it resigned. So the current CEO is actually pretty new and has been on the job for now just about 1 year. The last 2 points that I would like to cover today are to look at the valuation of FTC Solar and also compare it to its main competitor, which is Array Technologies. First, starting with a comparison with Array Technologies, we have that besides operating a very similar business model, it also sells solar trackers. We have that Array is much larger in size, with revenues that are 4 times larger than FTC Solar. Also, besides also having experienced nice growth in the past years, opposite to FTC Solar, it is profitable, or at least it is expected to be profitable this year, something that for sure FTC Solar isn't going to be. In terms of cash flows, Array is almost cash flow positive, while FTC is very far away from it. My initial thinking when investing in FTC Solar was that I was paying a bit more of a premium, but for a company that I was expecting to grow faster than Array Technologies, was very well capitalized because it just IPO'd and it raised a lot of cash, and that I was expecting to turn profitable within the following year. However, this hasn't been the case at all, and of course I'm very disappointed about it. I mean, in 2022, Array Technologies is expected to grow 52% in revenues, while FTC Solar's revenue is expected to shrink, so drop 33%. Going into the valuation, I must add that FTC Solar hasn't been the only one diluting, as Array Technologies has also been issuing quite a bit of shares during the past quarter, so it seems like both companies have followed the same strategy there. Regardless, we have that based on 2021 sales, FTC seems cheaper, but actually based on 2022 sales, it is Array Technologies trading the cheapest, as FTC Solar is expected to report lower revenues than in 2021. In the graph in the screen, you can see the valuation based on the last 12 months revenues, and both companies seem to be trading at similar levels. FTC currently being a bit cheaper, but as I said, revenues are expected to drop, so it is not as cheap as it seems. Additionally, this is just in terms of price to sales ratio, but the net income margins and cash flow generation of Array Technologies is much better, which is what in the end matters. So in my eyes, Array Technologies is trading cheaper than FTC Solar. After everything that I have shared in today's video, I would summarize FTC Solar with the following key points. We have a company that is diluting, reporting massive losses compared with revenues, that is decreasing the revenues, and that so far management hasn't been able to properly forecast nor manage. The good points though are that the balance sheet of the company is still looking pretty healthy, at least for now. It is a small cap, which usually means that there's more growth ahead of it. I think that at the moment it's trading at a market cap of around 500 million. I don't have it in my head, but I think it's around that. And that it is in an industry that is expected to see massive growth moving forwards. Personally, I only have a very small portion of my portfolio in FTC Solar, and the good thing is that I'm only down at the moment 12%. That's just because I didn't go in very heavy at the beginning when I started my position, and I just kept dollar cost averaging as it kept going down. Still though, would I buy the stock today at the moment if I hadn't already started a position back about a year ago? Absolutely no. Especially with so many other bargain stocks in the market, and starting first with its main competitor, Array Technologies, I think that it's trading even cheaper than FTC Solar and with much less risk. However, it is true that if FTC Solar manages to turn things around and turn profitable next year and sustain operations and not go bankrupt in the process, I do think that the company has massive upside potential, and it wouldn't be surprising if the stock would double, triple, or more in the next years to come. Finally, I just want to put some more emphasis on something that I have already mentioned many times throughout this video, but I'm really disappointed with the performance so far of the company. Not so much of the share price, because I'm only down 12%, which is surprising, but especially because of the deterioration in the fundamentals of the company. The share price, I don't care so much as long as the fundamentals stay relatively strong. And well, if the fundamentals stay relatively strong and the share price goes down, I'm a happy buyer. But in this case, the fundamentals have really deteriorated, and as I said, I wouldn't advise, or I wouldn't myself just invest in the company at the moment. On top of that, I just want to do the classic reminder or disclaimer that I'm no financial advisor, and you should always do your own due diligence whenever investing in this or any stock. And with it, this is my update on the company after having gone through their earnings release and also listening to their earnings call. And what about you? Do you own shares of FTC Solar? Are you planning on investing in it? What do you think of the company? Please let me know in the comments below. If you enjoyed the video, then please don't forget to give it a like, subscribe to the channel if you're not yet subscribed, and as always, see you next time.